everything you do. If you learn something, then it's okay. 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 Checkers. So, let's look at number 1. I'm just going to go through every adjustment quick. A credit note issued to a debtor was not recorded. What is a credit note? So, a credit note is debtor's allowance, debtor's control, trading stock, cost of sales. Ne? Debtor's allowance becomes more, which means it's an extra minus in my sales. So I've got the normal debtor's allowance, which was in the trial balance, but this 86, ne, is the goods returned. It's that 86 there. Let me make it a bit bigger. Everybody sharp? Ne? But now can you see cost of sales is on the credit side. And what is cost of sales? Cost of sales is an expense. So if I credit cost of sales, it will minus. Always remember this. If your sales increase, your cost of sales increase. If your sales decrease, your cost of sales decrease. They go together because what is cost of sales? It's the cost of the goods that I sold. So if I sell goods, my sales increased. The cost of the goods that I sold is most now also more.
Isn't cost of sales the amount you paid when you bought the stock?
Yes.
But how does it?
So in other words, if
Or the cost of the sales that we made.
the cost of the sale, the cost of the goods that I am selling is most now also because I'm selling more goods. So now that cost is most also increasing.
So that
they go together.
okay,
Yeah, they go together.
So we were thinking of it as if though it's trading stock in a way.
No, you mustn't think of the trading stock.
No, not that it is.
Okay, let's go on. So now, the markup on goods was 100%. So now, when you see 100%, you are very happy because it's going to save you time. You don't have to calculate it. It's just half, so it's 4.3. So, less 4.3.
Really?
Yeah.
We never knew that.
Because, what is your calculation? It's 100 over 100 plus the profit. So it's 1 over 2. It's half.
Oh, wow, then. Ma'am, you know, like people.
So also if they give you the cost price, the sales price is double. And that's what most businesses do, small businesses, is they have 100% markup, meaning whatever they paid for the good, they will add double that as a sales price.
Yeah.
Okay. May I continue? We must also add it with trading stock. No. If you look, please stop talking. If I look at this, what happens to trading stock? It's on the debit side. And trading stock plus is on the debit side. And that is when I do the trading stock deficit, I add the 4.3. You see? Okay. Can you guys see the worth in AOL? We've done so much AOL, grade 10 and 11. But we don't do anything, not 11, grade 10, grade 8, 9 and 10. And that's the value of the AOL, is to go back into it to see, debit, what are you going to debit, what are you going to credit, what is the data, what is the click. So, let's go on. The provision for bad debts must be adjusted to 2% of the outstanding debtors. What is the outstanding debtors? If I go look, my outstanding debtors is 87,600. So 87,600 times 2%. Hey, what's the percentage? Oh, can someone just talk to me?
Percentage for what?
Thank you. 2%. I figured it out on my own without your help. So let's go get the new provision for bad debts. Can someone give that to me? 175? 2. This is the new one. Can you see here in the memo? Why is this wrong?
You can't see what you're saying.
Oh, what did I do wrong? I did something wrong.
You wanted to post, you didn't.
There was an adjustment.
Yes.
There was an adjustment. So that 87,600, I needed to subtract the 86. Why did I need to subtract the 86? Because the debtors do not owe me anymore. So this gives me what?
79,000.
And the 79,000 times the 2% gives me the new one.
Which is 158.
158.
0.
Okay, please stop talking. So that 1580, if I compare it to the provision they gave me already here, where's the provision? There. Can you see the 22 is more than the 1580? Meaning I want to make it less. So it's an income. Now, once again, I want to show you here. So I would have had that wrong, ne? Because I was very rushy. Okay. But can you see it only counts one tick? Okay. The 22, however, also counts one tick. And a bagel. But you have to show it to get it. Next adjustment. Next adjustment, they say, no entries have been made for stolen stock. Now, the moment you hear stolen stock, you know you're going to open an expense called loss on stock. Ne? And what do they say? They say here, the insurance has informed fine-tune blah blah blah. They have already transferred 48,000. So that's what the insurance paid out. The business in respect blah blah blah, and then they say Fine-Tune Limited bears 20% of the loss. So in the end, here I want to show 20%. Is that 48,000 is what they paid out? So that 48 is 80%. Can you guys see UK? So the 20 is what we bear, the 80 is what they paid out, gives me 12. Okay, now I want you to go look at trading stock deficit. Can you see they subtract, and I want you to please make a note for yourself, they subtract the full amount of stock that was stolen. They subtract 100%. The 48 was 80% that we get back, and we carry the loss of 20%. But this 100% here is about the stock that's missing.